Just going to casually go through the charts, check them out a little bit, and walk through step by step kind of what we want to look for. Things that I missed yesterday that I didn't get to trade. So we know that prior to market open, one of the first things I'd like to do is gauge the 15-minute, 5 and 15-minute order flow. Right now, I use the 5 and 15-minute order flow primarily as the main order flow. Now, of course, I keep the 4-hour, the daily, the weekly in mind. But as far as gauging where price is at and what I want to expect it to do, the 5 and 15-minute order flow is really important. Let me tell them in the chat that I'm going to record so they know. And also the first thing we want to look at is where are we opening in relation to midnight, right? So we were opening at 9:30 up here. Okay, so midnight's down here, right? So we have midnight. So statistically, we can expect retraces to midnight open, right? For most days, it's usually about a 60 to 70% statistical chance that we're going to come back to midnight open, regardless of where we're at. So knowing that when we open this high up, this is obviously way into premium, right? Because one thing we also need to keep in mind is where's previous day high. So we're opening above midnight and above previous day high, well into the premium. So knowing that, we want to be really, really cautious with longs. Now, there are days where, of course, we can open well above midnight and above previous day high, and we never come back to midnight and we just trend, right? We all have seen those days. Those days are certainly possible. But what we would want to see if that was going to be the case is we want to see a 15-minute PD ray right in here, and we want to at least expect a retrace down to previous day high in most cases. So that would be previous day high. So let's look on the 15-minute. So there's a couple things we want to mark out here on the 15-minute prior to us even engaging in the market at the open. So knowing that we're above midnight open, we want to mark out any PD rays that are nestled, on the 15-minute chart around midnight open. So do we have anything here? We have this 15-minute BISI. So before I even begin trading, before the market opens, that's what I'm marking out, which is why a lot of time in the pre-market plan, I use these 15-minute PD rays around midnight to kind of gauge our bias, right? On if we inverse this, obviously I'd want to see a close below midnight, then I'm going to get more bearish to take out all this liquidity here, potentially these lows. We come back and hold midnight, hold this 15-minute PD ray, then we want to look for liquidity higher, right? So we're always basing, or at least our temporary bias, based on the 15-minute PD rays around midnight open. At least that's what I do. So we have previous day high here. We do have this large 15-minute BISI that was created with news, right? So knowing all that, we want to at least see price come back down into that 15-minute BISI, even if it's going to continue higher, and retest that previous day high. So right off the open, there's a lot of clues that start to happen here. So again, I'm not looking for longs here, right? Market's going to open up. If longs are going to happen here and they just start going, I'm just going to not participate. I'm just going to wait because it's too high probable, being this high above midnight, this above previous day high, above untapped 15-minute BISIs, well into the premium, that you'll get trapped. It's not worth it. So we see that. So I'm either looking for shorts or I'm staying on my hands. I'm not going to blindly short up here. I'm going to wait for a setup, right? So the first potential setup that you can start to build clues, you don't even have to take a trade off it, but you can start to build clues off of it, is we get this open here of TMSO, right? So I think most of you guys know this that are in here right now, but I trade a highly modified version of quarterly theory. I trade it just specifically based off some studying I've done around it and pulled what I thought was highly valuable out of it, and then kind of altered it a bit to make models around it. So TMSO is obviously a huge part of that. And when we get that open, that's that Q2 opening price of the current 90-minute cycle. And we treat that Q2 opening price as a premium and discount of that current 90-minute cycle. Okay, and we can use it as a bias level, like a pivot level, and a turtle soup level. So right when we see this happen, we instantly start seeing rejections. See how these wicks immediately are rejecting TMSO. Now again, as this is happening, I'm already starting to build clues on where I think price could go, right? I'm either looking for previous day high inside this 15-minute BISI or midnight, right? I'm looking for one of those two things or both, because we're so high up in premium, and statistically we should come back down, right, in most cases. Again, we're not blindly shorting based off that. We're looking for clues to potentially frame a short, okay? So we get this rejection. That's a nice clue. Now you could, if you want to be a little aggressive, just seeing these rejections, you could attempt to soup TMSO to try to catch that move, right? That is an option. Now, in real time, this is new week opening gap, right? So in real time, the price looking extremely bullish, right? It could be a little difficult to short bouncing off a new week opening gap. But again, we're so high up in premium, and we have important levels below us that need to get repriced, that what you can do is build this clue and wait for a break below new week opening gap and retest a short, especially if you get a nestled PD array. So what do we get here? We get these rejections, and again, in the back of our minds, we're waiting for a potential short to test midnight, right, or previous day high. So that's a nice clue there. Market opens up, we get Q3 here, okay, break below new week opening gap here. So we finally get that close, after the market has opened below new week opening gap. We also get a PD array, a 1 minute SIBI here formed, right? So this right here would have been a really nice potential short. So this also paired with 953, you get, again, it's all about building the clues prior to this trade, especially with midnight being below us, right? We get that close below, we know that TMSO is rejecting. Price is essentially showing us that it wants to go lower. So knowing that, that's a potential entry there because of this break below, retest. If you miss that, what we can do is look and see we're in Q3. Do we get any type of Q3 inverse model to use after seeing this rejection, but we missed that entry, right? Because this probably happened quick, assuming the time of day, right? This probably was a very quick candle. So we can look to the left of the chart. Now, do we have anything over here that we could be inverse? Use as an inverse, okay? So here we're in Q3, right? So we got clue number 1 right here. TMSO rejecting. Clue number 2 right here. After the market has opened, we now have closed below new week opening gap. And then we got another clue, potential entry model right here. So again, if you missed this potential Q3 inverse is another good entry. So we get the inverse with this candle, and then we do get the retest right here. And we're also seeing that 953 opened, went into premium, rejected that. This is just like the 1235 trade, right? We go into premium of 953, reject that 1 minute PD array, close below immediately, right? MKM, I've not understood where the Qs are. Where do I learn that? Is that macro times? Yeah, so it's part of quarterly theory, MKM. I trade quarterly theory much different than like how it's normally taught. So if you want to kind of learn how I trade it, you can look in the quarterly theory section. But if you just throw on the indicator, there's 2 ways to get it. The King Line indicator has the all-in-one indicator, has it in there, or you could just throw on the one I use here. Where's it at? It's called quarterly cycles. Quarterly cycles, waffles BTC, and then I just modify it to only, for me anyway, I just put Q3 and Q4 up, well essentially just Q3, and then the TMSO, and I change like the background colors to just match my chart so it stays clean. But yeah, it's just a 90-minute cycle MKM. So there's 90-minute cycles. So there's like a Q1 over here. Okay, Q2, Q3, Q4. That's one 90-minute cycle. and I use TMSO and Q3. So anyway, we missed this entry. If you missed that entry, here's your Q3 inverse. This is our model. So we'll see how this plays out the rest of the day. But we have like I said, if you could only trade one model, if I could only choose one model to trade, it would be the Q3 inverse. Okay. So this one is a little tough because it's already starting to sell, right? But if you just trust the model, and again, why are we still potentially looking for shorts at this point? We still have not gotten to previous day high, and we still have not gotten to midnight. And we're showing these clues of more rejections to reprice down into there. So that's a nice potential entry. So these are two potential entries. Now previous day high gets hit. Now this is where we want to see, are we going to react and go higher? Because like I said, sometimes you get those trend days where we do not test midnight open and we come down to a 15-minute PD array, 15-minute BISI, and then react out of it and trend up the rest of the day. So knowing that, we have to be, this is a very nice partial, or even, you can collapse the trade, leave a runner for midnight, potentially look to add or something like that. So this has definitely been a nice partial at previous day high, or, just to complete the trade itself if you got in up here, or hold runners for midnight. Now we don't want to blindly long off previous day high, even though price is obviously really bullish, because why? We're still above midnight. So we don't want to take a blind long off of it. We want to wait for a reaction, and then if we're going to get a reaction with all these SIBIs here, we have to already assume that if price is going to trend higher for the rest of the day, and we're going to have a bullish expansion off this 15-minute PD array, we're going to have, look at all these different entry models we're going to have. We don't need to try to just blindly long previous day high or blindly long this 15-minute BISI, right? We can essentially wait for price to react and then use either this SIBI or this SIBI or even this SIBI, or if you want even new week opening gap, to get inversed. And then we look for longs out of that based off delivery from the 15-minute bullish PD array, right? But we don't get that. So what happens is we end up not reacting off previous day high, right? So that's telling us, okay, price is still likely going to be looking to head to midnight, right? So here's another, late entry here into midnight. This SIBI right here. This one would have been a lot harder to take. I probably would not have taken this particular SIBI in real time. If I missed both this and I missed this one right here would have been tough, because we have New York Open right here, right? Now, if you guys know how I trade New York Open with midnight, I want to see it close below New York Open to confirm that we're going to go to midnight. So seeing the signature right here, New York Open could have also been a target to complete the trade. So I probably would not have shorted this in real time. That would have been a little bit too iffy for me, because we could have just came down, bounced off New York Open, inverse this, and kept going, and just left midnight behind. However, if you collapse your trade, that's great. Now we can wait and see what sets up next. So you get this SIBI, it does deliver us down into what? What do we have here that we marked out pre-market? That's a 15-minute BISI. That's really important because it's nestled around midnight, right? So you guys know that any PD arrays that are nestled with time levels are basically how I trade all day long, okay? I'm using time of day, so different time intervals of day, and then time and price, meaning time levels that are nestled with PD arrays on the chart, okay? So 15-minute BISI that's nestled right here with midnight. We come down, we get real close to midnight, a couple ticks away, one tick away, but this is where we have to use ES. So ES during that time, yep, it did indeed go to midnight, swept it, bodies held it, right? So what are all these signatures showing us now? So we repriced this entire leg, went all the way back down, we retested midnight, we have this 15-minute BISI here. It's holding. Midnight's holding on ES. So we can expect price to potentially want to go higher, right? Now, so you could attempt a soup. That would have been all right to do with this 15-minute BISI nestled with midnight. Not a bad idea. However, this is a little bit tricky because this kind of looks like AMD, right? Accumulation, manipulation, potential distribution down to all this LR, and these lows. So this is where time can come in handy and help us out. where we can break things down a little bit more. So right here, we get this inversion that happens off of midnight. Okay, so you might think, well, that probably, could be a good long. And yeah, this is not a horrible long to try. I don't hate it at all. It would have failed, but I see you're bouncing off 15-minute BISI, you're bouncing off midnight, you get the inversion, you're above New York Open. All signs kind of point to higher, right? However, where are we at in relation to time intervals and time models? We're only at 10:10. We're not at 10:20. I like to see 10 turns around 10:20 or after at 10:34, right? So this, while it's not a bad trade, you could have easily taken it and then, you could have stopped with a, you could have taken a partial if you would have taken the inverse immediately, partial here, and stopped at break even. Or you could have stopped with a close back below New York Open, so immediate stop out. Or if you wanted to be more conservative, you could have just kept price on until we lost midnight, but that's too much drawdown for me. But with time, we want to see that turn happen. If we're accelerating down from open all the way down into 10:20, I'd want to wait for 10:20, right? You guys know I do that a lot. Wait for 10:20 and then look for a turn. If we get this turn this early, I got to be a little suspicious of it, and I might want to wait for 10:34. Okay, so in this case, it would have been best to wait for 10:34. The main reason is because, again, we have to build clues of what price is doing prior to where we're at now. And that potential AMD here, accumulation, manipulation, distribution, tells us that we need to wait for more root candles. Okay, but again, not a bad long, just didn't work out. So we get this, 10:20 turn here. We wait for 10:34. Now this is where we can really start building more clues. 10:34 opens. What do we do as soon as 10:34 opens? What's that candle do? Comes right down to discount of 10:34 and test this 15-minute BISI, right? So that candle right there, building the other clues that ES is holding midnight, we're holding this 15-minute BISI. We get that test into discount of 10:34. Now we can start thinking, okay, now we can expect price to potentially want to go up and deliver us higher. And what does price continue to do? It's just holding 10:34, right? We're just wicking below it, but the level itself is holding. So now we can do a couple different things. We can just look for an inverse or a regular entry model, however you want to enter the market. We can use this potential inverse that's nestled right around 10:34. We get that inverse with this candle here, which also closes above New York Open. Retest into there. That's a nice long. The alternative long is just using the fair value gap here. All based off of what? Delivering from 15-minute BISI and holding midnight open on both ES and NQ. So that could have been a nice long. Target these highs. Come up in here, come back up into that inversion. That would have completed the trade. So now we got this Q3 here. So for this Q3, and we got TMSO here. So we come down, we have this BISI here in Q3. What happens to it? This is really nice because look what happens here. We get this BISI here in Q3. It gets inversed. And what happens at the same time? It gets inversed. We close below TMSO. So you have a double clue here. Yeah, reject TMSO. So this is why it's so important to use TMSO as a confluence type time level. So you have two really nice clues here, right? Q3 inverse, TMSO, you get that inverse retest. You got one small chance to enter there. And you can take it down to, New York Open, and then right back to that 15-minute BISI. Do you see how important this 15-minute BISI is that's nestled with midnight? I need to remain bullish on price until this 15-minute BISI that's nestled with midnight is lost and inversed. Until that happens, I just regardless if I think it's AMD, regardless if I think I want it to go lower, We have tons of liquidity lower, regardless of what I want it to do. The 15-minute PD arrays that are nestled around midnight are extremely important to continue to gauge and see what price is doing. If every time we come down here, we continue to hold it, right, we just have to assume that price is still bullish. And then we just take everything. Doesn't mean you can't take shorts. You can still take shorts and you can target this, right? But as for us to get extremely bearish, we would need to see this 15-minute SIBI or BISI inversed and turn into a 15-minute inverse. So, you know, taking this Q3, this was a nice Q3 inverse here. Yeah, I'm recording, JJH, don't worry. I'll post this up later. So we get that close below TMSO, Q3 inversed, down into that 15-minute BISI. So New York opens a nice target, 1034 is a nice target, 15-minute BISI, nice target right there. So now we wait, you know, won't take anything into here going into 1150 macro. So now we can look for what? The lunch sweep to potentially occur. So let's turn on the macro times here. So we had this move between 1110 and 1150, right? 1149, that time interval. We come down, all the way down into 1150. So this is a high probable lunch sweep macro now, because we can expect 1150 to probably pump, right? And then for the lunch sweep, what we're looking for is price to leave untapped PD arrays on the move up. Okay, so that's what we look for the lunch sweep, and we want to target that going into 1210. So this move up creates lots of untapped PD arrays. Did anybody happen to catch this yesterday that's in here right now? Liddy, did you get it? You've been grabbing the lunch sweep pretty often. This was a pretty good one. You also got 1202 showing rejections immediately right off the bat. So lunch sweep. You can wait for any type of rejection to show here. So we get that 1202. Price is wicking up, rejecting. We know we have tons of PD arrays below. Very nice potential short with a, you know, you could just use a close above 1202 to stop out and target any of these untapped PD arrays here, because we should expect that to happen on most days for that lunch sweep to occur. Going after 1210, we should expect price to retrace into untapped 1 minute fair value gaps made on the leg up between 1150 and 1210. This price signature happens almost every single day. Pretty cool. So that played out nice. So that could have been a nice potential short here at 1202 rejection. Again, targeting 1 minute untapped PD raise. So that's another trade. And then now we have our 1235 trade. So this one, a little bit tricky, looks like. Did offer a nice 60-point move. Should do this here. Did anyone catch this yesterday? The 1235 trade? I didn't really get to go through the chat. But here we have 1235. So when we're going to 1235, we want to open up the 5 minute, 15 minute, and look for any PD arrays nestled where? In the premium and the discount of 1235. So we have what? A 5 minute BISI right here. In relation to 1235, it's in discount. Now, do we have a PD array up in here in the premium? Yep. Okay, so we have a 5 minute in the premium in relation to 1235 that's formed here, and we have a 5 minute BISI in the discount of 1235 that's formed here. So now you might say, okay, well, how am I supposed to know which one to use if price starts printing towards one or the other? Well, that's where we have to build clues what's happening prior to this. So what did we talk about prior to this? What's one of the most important clues for us to be bullish or bearish right now on the charts? Did anyone catch what I was talking about? What's keeping me bullish right now, regardless of the premium and discount for now anyway? Yep, exactly, Levi. Yep, 15-minute PD array nestled with midnight open, right? ES continued to hold midnight open. It got tested. 15-minute BSC holding price. Everything's acting bullish, right? Everything's showing bullish price signatures. So knowing that, by default, I'm gonna expect 1235 to be bullish, right? Just by default. So we have 1235. We have this 5-minute BSC down here. Okay, so it gets tested to just before 1235 and 1234. 1235 prints, we get that price delivering up, and now we have the model. Here's our model. What do we look for 1235? We want to see price be coming from a 5 or 15-minute PD array, and then we get an inverse that's nestled within or right next to 1235. I think this model played out every single day this week, exactly how we have it written out. It's pretty cool. You know, DTT's been really amazing, and kind of meshing the models with our own models, creating like a new hybrid model has just been really incredible. This 1235 trade really is something. Does the lunch sweep act as a mini manipulation before the 1235 prints? I remember going long at 1235 because of the lunch sweep that occurred. Yeah, you're about that. Actually happens very, very often. That's why if you guys go study the lunch sweep I have in the education section, what do I tell you guys about the lunch sweep? That it should be treated as a scalp. It's not a continuation trade. It almost always will offer you, some sort of move. So you can take that move based off this for the lunch sweep. You can take the lunch sweep itself, or very often the lunch sweep will come down, find that PD array, and if price is still bullish, it will just continue higher from the lunch sweep legs. That's a good question. That definitely happens very often, and that is exactly why I tell you guys this should always be treated as a scalp and never as a continuation trade. I don't hold runners on the lunch sweep. So we get that 5-minute BSC right here. See how it's all about? We're just building clues, right? Just building clues. 5-minute BSC gets tested here right before 1235. That inverse that we look for to happen right around 1235. Again, we're using PD arrays nestled in with 1235, right? We get that model, we get that signature. So now this one would have been kind of hard to enter on unless you took this, you caught this, or you, like what Yermbabot is saying, you caught any of this, any entry from these 1-minute PD arrays or this 5-minute BSC. If you didn't catch any of that, this inverse you would have had to enter immediately as an inverse. This would have been tough. You would not have gotten that retest. So it would have been best if you already were order long. Otherwise, yeah, you could have slapped it and then maybe added another on a retest using 1235 closing below as your stop loss. But you didn't get the retest, so if you just took like half size or something, that still would have worked out for a nice move up into these highs. And now we finally find the 5-minute SIBI that we had marked, right? So price comes up. This is really cool, guys. You can just see how we're just using our models step by step all the way throughout the day. We have models for everything throughout the day. From open to closed, we have different models to look for with price, right? So 1235 trade comes up. We dig into this 5-minute SIBI. We sweep these highs. So you could target these highs, collapse the trade there. And now we have Q3. So let's see, do we get a Q3 inverse model? Okay, we're coming from a 5-minute SIBI. We tap into that. We also sweep highs. So criteria has been met for a Q3 inverse. We get a inverse right here in the premium of the leg. So this inverse is created from this candle here. It's happening inside Q3. beautiful retest. This is a really clean, really nice Q3 inverse here. So you can take that, you can target the roots. You know, you got 1202, so you could have taken that down into 1202, taken partials, or collapse the trade. Would have gotten stopped at break even. However, bodies still continue to hold this. So you get that. You know, if you held on to it, would have gotten a nice move here. Looks like this was probably a pretty aggressive move, probably a really fast candle, I'm assuming. Again, I did not get to trade it, but I'm assuming this candle probably had a lot of speed, which, again, this is a nice potential turtle soup if you're looking for it. Was it fast, Liddy? I'm assuming this candle probably was extremely fast. So if it was really fast, this is these are the best turtle soup candles, the scary fast ones, because more times than not, we're just basically taking out everyone that's long, going into just repricing this 5-minute BISI, right? We're still holding this 5-minute BISI. Now, how do we, look for turtle soup entries? Well, we need a time level nestled within that 5-minute BISI, like I keep saying, right? We want a time level nestled in there. We do have the 1121 root right in there as well. Now, me being pretty aggressive, I probably would have souped it here at 1235. And I would have used a close below 1110 root as my stop loss. Probably would have taken it with 3 or 5 micros, so nothing crazy. But definitely a high probable turtle soup here. Really high probable turtle soup. Because we are still bullish. Remember, we are still bullish, right? We're holding 15-minute BISI around midnight. We have this 5-minute BISI. Candles with speed coming down to these roots, nestled in a 5-minute BISI. Again, I would have turtle souped it right here at 1235. So I would have had to have a little bit of drawdown. But knowing the speed, as long as we hold this 1121, I'm going to be okay with it. So that could have been a nice potential turtle soup. Taking it back up again to this 5-minute SIBI. So these are just all potential scalps, stop to break even, hold runners, etc. Then we finally get 209 to come to print. So this is our last interval of the day. So we want to look for a potential expansion move here from 209 into close. And again, we come back down to retest 1235 and this 5-minute BISI here. Price is still holding. Everything's looking bullish. So now, if we're flat, we can just wait for, any type of entry model to look for longs, right? Because we're assuming that price is still bullish, right? We're holding that 5-minute BISI. We close back about 1235, and now this is where, again, one of my favorite levels on the chart, TMSO, comes into play again. Oh, and yet again, let's check this out, Q3. I'm telling you guys, this model is solid. Okay, so we get this delivery from 5-minute PD array, so we automatically now, we either need liquidity to be swept or we need to be delivering from a PD array for Q3 inverse model, right? We are delivering from that PD array, so we now have a checkbox to look for the Q3 inverse. Again, there's no Q3 inverse model if we do not sweep liquidity or tag a PD array. Okay, one of those two things need to happen for it to be a valid Q3 inverse. This is the most high probable inverse fair value gap on the chart. Okay, the Q3 inverse. Okay, so we get that right here. This right here is inverse with this candle, delivering from the 5-minute PD array. There's your entry, or you could have entered on the inverse itself, then re-added more, or just, held the trade. So inverse entry here, based off of us holding the 5-minute BISI. So you come up, you get to TMSO, put your stop to break even in case we reject, right? So here's where you want to put your stop to break even, close above. Now, if you miss this Q3 inverse entry, where can we enter now? there's a couple different potential entry models coming into play here, still in Q3. We have this inverse now also created in Q3 with this candle. And now what can you use as additional confluence to enter the market here? If you miss this entry and you see this, what does this candle do with TMSO? We reject it here. TMSO gets closed above now, right? So we have delivering from the 5-minute BISI. I can't stress enough how important it is to build clues as you're trading. So you need to build clues, see what price is telling you, and then use time and price models to look for entries based off those clues. Q3 inverse entry, if you miss that, we get the close above TMSO, and we get this inverse. Okay, so this is a potential entry, because what does TMSO do? It offers a turtle soup. Again, how can you use a stop here? You can use a stop with if we close below TMSO, or if you have a little bit more risk adverse, you're a little bit more risk adverse, you could use, you know, inversing that as your stop. It's kind of up to you. So this would have been a nice entry as well, second entry. Okay. And now price continues to deliver all the way up into, now what do we expect to happen during the last hour of the day? We should expect, there's certain levels we want to look for between 3 and 4 o'clock. Almost every single day we will see this, right? Almost every day. We want to see 9:53, 10:34, or midnight open, right? In the last hour of the day. And PM open. So there's 4 levels there that we want to see tested. So knowing that, when we see all these signatures happening, and now we close above PM open as well, you are watching, you know, for a very, very high probable move up to 9:53, right, at the end of the day. So that would definitely be a nice target, which also would end up sweeping this high, you know, going into 9:53. So that would have probably, I would have collapsed my trade there. That's a beauty. Not sure if anyone caught this yesterday, but that looks really nice. Going into the end of the day, and we finally close back above new week opening gap right here. And what happens when we close above new week opening gap now? Close above, we can use this new week opening gap just like a time level, right? Just like a time level. So it could be a pivot level, turtle soup level, you know, draw on liquidity, all the above. So we close above it as well, and we're now above 9:53. Price just comes back down to retest it and delivers it at a 350 macro all the way up to this manipulation level, and just sweeping some liquidity up in this LR right here. And price just pretty much reprices down to new week opening gap, and that's it. So lots of actually pretty good moves during NFP yesterday. Man, I missed a good one. Yeah, I hope you guys did okay yesterday. But do you see how we use our models literally from the opening bell all the way to the end of the day? We have models and signatures that we can look for to guide us through the charts step by step, right? And essentially this whole day is based off of what? This entire day and everything we just went through and every model that we just saw play out. Every Q3 had a Q3 inverse model, which is pretty cool. So if you only traded Q3 inverse models, you had 4 potential really nice trades. All right, 4 potential trades there. The 953 model delivered really well. So if you just traded the 953, again, we got that rejection below new week opening gap. And 953 prints, pops into the premium, rejects, closes below. Okay, and 1235, same thing. Everything we look for, right? 5-minute BISI and discount, delivering from it, we get that inverse nestled with 1235, pushes up. So yeah, everything was based off that 15-minute. My bias the whole day would be based off that 15-minute BISI nestled with midnight open. So we wouldn't really get too bearish until we lost that. If we would have closed below here and made an inverse, then I would have started to look for short opportunities retesting midnight and this 15-minute BISI if it wicked above. Okay, I would be looking for shorts to target this LR here and souping midnight to the downside. But that didn't happen, so we have to assume until we're proven, until price proves otherwise, that it's going to be bullish. Thanks, Logan. Appreciate that, man. Yeah, it's definitely recorded. So does anyone have any questions? I just want to kind of go through the chart. I was going to do this anyway, and I decided, well, if I'm going to go through the chart and see what I missed, I might as well do it with everyone else. But I hope that gave you guys a little bit of insight. I went through it kind of quick, but you can replay this. But it's just cool to see, and I just want to reiterate to you guys the importance of using time and price levels together. And noticing how we have models for everything from open to close, and there's always something to look for, and there's always clues to be building. Do you have to take every single one of these trades that appear? Absolutely not. Don't have to at all. But it's important that you're building clues in the back of your mind as you're seeing price deliver, okay? And then that allows you to frame a trade for what's about to happen next, right? Of course, everything's easy in hindsight. Of course, every one of these trades was a piece of cake in hindsight. In real time, it's obviously a lot harder. But the nice thing about going back through and back testing and doing these reviews is building trust in the model. So when you do see it play out in real time, you're building confidence and you're building trust to size appropriately, not over leverage, and then trust the model to play out, right? Because we're getting reps in, seeing these things happen over and over and over again to the point where we can have trust and build these price models. And sometimes sometimes you're going to get stopped out and the model doesn't work. And that's okay. There's probably something we missed. There's probably a clue we missed that happened prior to that model that caused that, right? But it's no big deal. You're going to have losing trades sometimes. If you took, 2 or 3 losses, but still took, 3 or 4 of these other trades, you would have had, a nice green day either way. But yeah, Logan, that 209 expansion was nice. We got that 209 all the way into close. 209 printed. Went down to that 5-minute BISI again. Q3 inverse for the win, all the way up to 953. Pretty cool. But if anyone has any questions, I'm happy to go through the chart a little bit. If not, I will probably end the recording and then post this review for everyone else that missed it, and for you guys to rewatch as well. Little side note: starting next week, so starting Monday, I'm going to start streaming Monday AM sessions every week. Tyrant is going to be having class during that time. So what I think I'm going to probably do is just do a marathon stream every Monday. Probably stream the whole day. Maybe take a few small breaks or something. But we'll be trading AM to PM on Mondays now, all day long. So, and then of course I'll continue to I've kind of been enjoying streaming lunch with you guys now, streaming from 12:30 to close. So I'll keep doing that. Just keep streaming, lunch into close as well. But yeah, guys, that was pretty nice price delivery here for NFP. NFP could be tricky, because I guarantee you there are a lot of people, probably especially like the ICT traders, that saw this on the hourly. Accumulation, potential AMD, right? Accumulation, manipulation, and then you have all this LR here, potential distribution. So this particular hourly candle would have made it kind of tough. Yeah, you're a bot. Yeah, I could totally see that, because this looks like textbook AMD, especially coming up to new week opening gap, and we never even inverse this hourly, right? So I can see why the case for looking for shorts is there. But at the end of the day, it's all about midnight open. Midnight open is indeed the king of the charts, and any important 15-minute PD array nestled in there is going to, be our guide. Yeah, you're right. If I was trading this in real time yesterday, I certainly would have been open to shorts. I would have been, thinking that was a high possibility to come down and take all this. But I wouldn't have been hunting that again until we got that 15-minute inversion. That 15-minute inversion closing below midnight would have offered turtle soups all day long to soup for the LR. But since it held, you have to just, regardless of what we want or what we think, you got to just see what price is telling us, build those clues, and then just trade our models and just trust the models. Because the models will have their own signatures in themselves that we should look for. But any other questions, guys, about price or the models? Going into next week, this massive grind up, some massive short targets. It's pretty tough, man, because there's a few things going on here. On the daily chart, we rejected this BPR. Pretty nasty daily rejection up here on that BPR. But on the weekly chart, we just dug into this weekly BISI, and with a wick coming out of it, pretty aggressive wick out of that weekly BISI, and we're also fighting this weekly SIBI. So definitely next week would be something we take piece by piece, no doubt about it, because there is a lot of liquidity below us here, but we also have to be open to a buy model up to all-time highs. So I'm pretty neutral going into next week because of that daily BPR rejection, but also holding the weekly BISI. So there's definitely next week would be like a 15-minute at a time type thing before we can build like a potential weekly profile going into like Wednesday. Yeah, definitely we'll just take it piece by piece next week. Pretty neutral. Okay, so let's see what JB's got to say. Oh yeah, JB. So, I mean, I told you guys, like, it's pretty. I do a lot of things that are unconventional when I trade that probably will, most people wouldn't do. But yeah, I don't use a bias, on the daily. I don't have a daily bias at all. I just have a fly by night bias, I guess I would say, by the 15-minute PD arrays around midnight. So I just kind of keep that in mind, and then I'm just constantly trying to build clues. I can trade longs and shorts, even if we're holding this 15-minute BISI and holding midnight. I'm expecting overall price delivery to be higher, right? I'm expecting price to go higher, but there's still plenty of good shorting opportunities as well, right? Just using our models. So you can still, doesn't mean you can't short. It just means, for overall draw on liquidity, I have to keep in mind I'm thinking it's still potentially higher. But yeah, I definitely never want to get married to a bias. That can definitely cause like a conflict of interest in your own models, in my opinion anyway. And more so, I'm just looking to see where price is delivering from. That's the biggest clue for me. Where price is delivering from, and then what lower time frame signatures are showing based on the models that I look for. And then where could price potentially deliver to. So those are the three things that I'm always thinking to myself when I'm trading. Every trade I take, I'm looking where we're coming from. Are we coming from a 5-minute bullish PD array? Are we coming from a 5-minute bearish PD array? And then what is lower time frame showing us? We get a bullish model here, lower time frame showing us entry models here coming from a 5-minute PD array, but then we get up here to this 5-minute SIBI, and you get Q3 inverse coming from a 5-minute bearish PD array for a potential short, right? So you can still short. There's still signatures to short. And that's why I don't mind having no bias. I can just trade longs and shorts all day long, just going off the models that we trade, right? Double purges, yeah, so we'll like sweep a low, come back up, sweep a high, and then come all the way back down to and break the lows and continue. It's not something I use myself. I definitely see it in the charts. I don't think it's not like valid or anything. But yeah, you can see double purges happening quite often. We kind of get one here. So we sweep the highs, come back down, sweep the lows, release the candle body liquidity, and then come back up to the highs again and run right through it, right? Basically used to offset everybody. So take out all the longs here, take out all the shorts here, take out the longs here, and then continue to take out the shorts and continue to run above the highs that it took out earlier. But yeah, it's not part of my models, but it is certainly a signature, that happens. see a couple of you guys typing. So if you have any more questions, I'm happy to go through it. Yeah, Liddy, you are right. Now also keep in mind ES, right? So can't let this mean too much because we need ES. We always use ES and NQ together, right? We use them kind of as one to frame a trade. I'll take a trade on NQ strictly based off ES sometimes, especially with the exact equal highs, exact equal lows, 15-minute apart, the hidden turtle soup model we have. So when we saw this move down to midnight on ES, it did indeed sweep it and hold it, right? So that's all we need. We don't have to have NQ tap midnight now, because one of the indices already took that liquidity, repriced it, and a lot of that liquidity is probably in that 15-minute BSC that's nestled with midnight. So a lot of that liquidity is right in here that it needs. So seeing that signature, you pretty much can check the box. And yeah, Jesus, I do take trades outside. I take trades, anytime my model presents itself. So I tend to take trades around the root candles pretty much all day long. I don't have that information, to be honest with you, what exact win rate of outside of Q3. And if I showed you my win rate right now, it's going to be around the low 70s. But I don't really factor in win rate that much at all. And I'll tell you why. You could have a very low win rate and be a profitable trader. It's not easy. You could do it though. I mean, it is, but you can have a 33% win rate and have a 2-to-1 RR or something, and you can be profitable. However, that's really difficult. And you can also have a 90% win rate and be unprofitable. As crazy as that sounds, right? Because what can happen? You can have 30, $100 wins or something at 90% win rate, and then that 31st trade wipes it all out in one trade, right? Because you don't manage risk right, or you have negative expectancy type trading models. So don't put too much emphasis on win rate. It's more so how you manage the trades themselves while you're in them. Win rate's kind of I think that gets thrown around too much to try to flex or whatever. I don't know. It's not as important as you might think. It's more so your trade management. Because you can frame a good trader or a unprofitable trader off either high or low win rate. If that makes any sense of how I explained it. Questions about, so a root candle is time liquidity in the market. So these are high probable drawdown liquidity, pivot levels, and also bias levels to frame trades off of. So when we have these specific candles print, it is part of digital time theory. I make a little bit of some alterations to it based off what I've been seeing. That's why I built the models I built around them that I share with you guys. But the root candles are liquidity in the markets that's based off time. So we'll often see price. We can use them as rejection levels, pivot levels for premium and discount, just like the 953 trade here, priced higher into this SIBI in the premium of 953, and we close below it. Now I can look for shorts. We also can look to target, exactly the roots, throughout the rest of the session. So we get like 953 ends up being a draw on liquidity at the end of the day. So it's basically, I use them to frame trades. And if you want to see that, how I do that, in the mentorship section, I have videos breaking that down step by step. So if models refine outside of Q3, when presents itself when you're experienced trading them? Yeah, all around, Jesus, exactly what I was just talking about, all around the root candles. So I pretty much, anytime we get a TMSO to print, we're in Q3. If we're outside of Q3, then I'm looking for TMSO. I'm looking for root candles. Trades based off those root candles. Trades based off midnight open. Trades based off New York open. So I'm using time levels all day long if I'm not trading Q3. If I'm not trading Q3, we have plenty of other models I kind of like throw in there and look for. And you can just frame trades based off what is happening around TMSO a lot of time. So if you just deleted all this other stuff and you're just using TMSO, you get this 5-minute BSI. I didn't even catch this earlier on our review, but you get this close above TMSO here. See how we price below it? With this 5-minute BSI, we close back above it. And now we finally get a PD array around it that was formed. And there's your fair value gap. retest. You can turtle soup it, use the fair value gap, go higher. So yeah, TMSO is something to keep in mind throughout the day. And then just, yeah, liquidity levels. I use time liquidity a little bit more than price liquidity. I think if you guys know, you've noticed that by now. When I trade, I target time levels. I use time levels for entries. I don't target highs and lows as much as I target time. And that's why a lot of times you guys see if I'm targeting highs and lows, I usually just use candle body liquidity more times than not. Not necessarily the wicks all the time. Because for example, like if you were short here, this is why I always tell you guys to target candle body liquidity. Sure, you might sacrifice 3 to 5 points, but you also could end up missing your trade entirely. You know, for this Q3 inverse, like let's say you held this trade this whole time, and you finally got this move that you were looking for, and you had a limit order. You had a limit order at this low. You know, you don't get it, right? Now you're like, oh man, okay, now you're seeing price go back up. Now you got this inverse. Okay, now you probably want to, you know, take your stop in profit, or, you know, even break even. All because, you know, you were targeting the wick low. Majority of the liquidity is built into the bodies, right? You see this in the charts. If you really dissect the charts, the bodies are really important for liquidity levels. So if you just target the bodies, you're giving yourself a much higher chance to get a completion on your trade, or partial, or whatever you're trying to do. But yeah, guys, I think I'll wrap it up there. Just wanted to hop on and do a little market review. Missed trading with you guys yesterday. I'm looking forward to next week.